Adena, welcome. It's great to see you.
Yeah, it's great to be here.
Yeah, first of all, congratulations on the new position too.
Oh, thank you very much.
Chair of the Nasdaq.
Really appreciate that.
I know that just started
in our house now. Right.
Exactly. I know. I feel like it's it's a
reversal.
You get a new title. Well, we'll talk about titles because I have a question about that later.
Okay.
Let's start off, though, talking about the year, because it was a very difficult year for the markets, not just equities markets. If you were looking at what happened with things in the pipeline for IPOs, with deals all the way through, things kind of froze up. What's it looking like now? What's it starting to feel like?
Well, I would say right now it kind of is in that zone at the moment as well. I think there's still a lot of unknowns that people want to see have a little more certainty around, most notably the interest rate environment. And what I think we should expect is within the first 3 to 4 months, we'll have a pretty known interest rate environment.
You know, it's funny. Yesterday, somebody, I forget who it was, maybe one of the bankers that we spoke with, said that it's almost worse waiting for a recession. He just wishes that it would get here because it's the uncertainty that no one can plan for.
Yeah, I mean, I think you have to recognize, first of all, I'd like to think that we don't actually have to plan for a recession, but and it's not an absolute certainty that it's going to happen. But what people really want is a known environment, right? So they want to understand their cost of capital. As a company, we want to understand that in terms of underwriting investments. As an investor, you need to understand that in terms of being able to model investments and then understand what your hurdle rate is in terms of your investment return versus your cost of capital. If we can get to that point where we have a known interest rate environment, even if inflation is still a little elevated, I think we can operate in that environment for a long time. That will allow investors to make conviction decisions. It'll allow companies to make capital allocation decisions. And I think we're going to end up, hopefully, even, skirting a recession, but even if we live in one for a little while, we'll know the environment, and that creates a better environment for investors.
Even if it's 5.25%, you'd rather just be there?
Well, we lived in that environment for many, many decades, actually. So I actually think that we forget that the last 14 years has been a little bit of an economic experiment. And, prior to that, we had 3, 4, 5% interest rates for a long, long time and very vibrant growth in the economy. So I do think we can live in that environment for a while.
In your outlook that you just put out this morning and in the things that you're seeing, things that are up, you made a really interesting point about how, money's no longer free. And as a result, a lot of things are going to have to operate differently.
That's right. Yeah, I think, first of all, this notion of growth at all costs is gone for some period, for the foreseeable future. The cost of capital is real. So money costs money. And so access to capital is going to have some sort of consequence. That'll make it so companies are making more discerning investment choices in terms of how to grow and expand their business. They're going to be focused on cash flow a little bit more, I think probably a lot more. And then I think investors are going to underwrite companies that can show profitable growth or a clear path to profitability. And in that environment, that's a nice, sustainable way for us to manage our economy for a while, and a much more sustainable market environment as well.
Does that stifle innovation, or just mean that only the best ideas get funded?
Yeah, I think instead of letting every sprout grow, you're going to choose which sprouts are going to grow into trees, and you're going to really go hard after those. And the digital transformation of the economy is something that's going to happen. It's happening. It's an unstoppable force. I think companies will continue to focus on that, making their use of their data much more strategic, being able to leverage their infrastructure much more efficiently. And frankly, with the labor environment, they're trying to do more with less. So they want that technological transformation is real. I think that's one of the trees, right? That's the one that's going to grow into a tree. And then they're going to have to look at what growth pillars are really meaningful. At Nasdaq, we have 3 key growth pillars, and we're continuing to be very, very bullish on those. But we also have to make sure we're very efficient internally to have the benefit to be able to invest in those.